Ho ho ho, Christmas is coming, and while it's time to close this beautiful 2024, we still have a big month ahead of us. It is why in today's video, you'll find 3 of the best stocks that you can buy right now in December 2024 before the end of the year. So without further ado, let's take a look at the first pick on my list. With the most recent results of the US elections, we've seen that many great companies have already started to benefit from these news. One of them that has gained great value over the past month is the company Tesla with the ticker TSLA. Donald Trump's great friend Elon Musk, that has recently been put as the head of the new Department of Government Efficiency, aka the DOGE, has been able to revolutionize multiple fields of our society over the last couple of decades. In fact, the track record of different companies from Mr. Musk is quite incredible when we take a look at the different businesses such as PayPal, Twitter, SpaceX, and Tesla. It means that he has been involved in many of the most important sectors of our economy over the last decade. But today we'll take a closer look at his Tesla company that has been on an excellent momentum lately. One of the key factors that has been responsible for such a great positive momentum in the value of Tesla is the recent election of Donald Trump. We've notably seen that over the past couple of weeks, Trump's transition teams has been reporting some outline plans to ease the self-driving car rules, which could help to make Elon Musk's dreams come true of launching a Tesla robo-taxi service. Also, it is no secret for anyone that Elon Musk has been already working over the past couple of months to be able to elect Donald Trump as the new president, and that he is now a close friend of the president-elect. And so it is highly possible that he could use his friendship to encourage President Trump to exempt Tesla of the China tariffs that have been proposed by the new president of about 25% to China. This could be super important for a company like Tesla that is currently producing over half of their total production of cars in China, where their Giga Shanghai factory is currently the world's largest electric car factory with a manufacturing capacity exceeding 950,000 cars produced per year. Only by itself, this factory, founded in 2019, has been able to cross the threshold of 3 million cars produced since its creation in October this year. So Elon Musk will definitely be looking for a way to keep this factory from running with the lowest cost possible. All of these great news could definitely benefit a company like Tesla that was on a slowdown before the results of the election, where we can still see that in their latest earnings report, they've still been able to increase year over year their total quarterly revenue by about 8% up to $25 billion. This was mainly driven by a slight increase of 2% in their main branch of electric vehicle sales, as well as a gigantic 52% increase in their energy generating and storage revenue that is now up to $2.3 billion for the last quarter. This last subsidiary is often omitted by many investors because when we think about Tesla, usually we think about their cars such as the Tesla Model 3, X, and Y that have notably seen a certain cut price recently, but we often omit the great quality of their different energy products. With a wide range of products and services in that field, such as their famous Powerwall number 3, their Megapack, or different solar panels, Tesla is also at the forefront of their competition when it comes to generating and storing energies, notably for cars and for houses. All of these factors and news, combined with a lot of potential of growth predicted by the analysts over the next couple of years, makes that Tesla is definitely a great choice in my opinion for the long term. Now for the second pick on my list, it is one of the largest retailers in the entire world, which is the company Walmart with the ticker WMT. In fact, this American multinational that is currently worth over $700 billion could still have a lot of room for growth for the future. Over the years, by selling a bunch of different goods from electronics to pharmaceutical products, passing by food and sports items at the lowest cost possible, Walmart has become one of the most trusted retailers in all of North America. Over the last couple of quarters, we've seen that they've been able to crush their earnings results where they've been able to beat the analysts' predictions every single time. In their latest earnings report, we've notably seen that their total net sales have been jumping by about 7% up to about $169 billion for the quarter, while both their operating cash flow and their free cash flow have been massively increasing year over year. Add to this, their earnings per share have also popped in the last quarter, increasing by about 14% year over year to jump to 58 cents per share, which has made the company boost its full year forecast for their 2025 outlook. And so at the moment, it is fair to say that Walmart has the win in their sale, especially with the holidays that are coming, meaning that people will be spending more money, and meaning that at the same time, their next earnings report should be extremely profitable. All of these great news have made the company gain over 80% of value over the past year. However, there are multiple reasons to believe that this growth could continue on the same path over the next couple of years. Over the past 4 years, we've seen the cost of everything explode, meaning that people are now looking more than ever for the cheapest possible ways to buy and purchase their essential goods. On that side, Walmart has been able to establish themselves as the king of the retail sector, in front notably of their big competitor Amazon. The main difference between both of these companies is the fact that Walmart, despite generating more total revenue, is currently trading at about $800 billion of value, while Amazon on its side is currently trading at over $2 trillion of valuation. It is why, despite a price to earnings ratio of about 40, which is still slightly lower compared to Amazon, what is truly interesting about Walmart is their price to sales ratio. This indicator that is showing how much investors are willing to pay for $1 of sales of a certain company is showing that in the case of Walmart, you would be paying about $1 to receive about $1 of revenue from this multinational. And so even if Walmart in the near future would be worth about half of the current market cap of Amazon, it would still make your current investment that you could be making at the moment about double in total value. It is why I'll be keeping this company on my watch list for the next couple of months to see if it can continue on this massive bullish movements for the next couple of years. Finally, for the third and last pick on my list, I've decided to go with a classic of the holiday season, which is the company Coca-Cola with the ticker KO. No introduction is needed for this company that has been in the mind of multiple generations of kids since the beginning of the 20th century. Indeed, when we think about Coca-Cola, the first thing that often comes in mind is their famous Coke beverage. But it is also important to understand that Coke also owned multiple other brands such as Sprite, Fanta, Barks, Dasani, Vitamin Water, Nestle, Powerade, and even Body Armor. Compared to their biggest competitor PepsiCo, Coke is a pure-play beverage company, meaning that they don't own any types of food or snack brands. Nevertheless, at the moment, this company could represent an excellent entry door for any types of investors that is looking for great growing dividends. Indeed, lately, we've seen that Coke has been on a certain downtrend momentum driven by some poor earnings results. In their latest earnings report, we've seen that their quarterly revenue have been slightly down by about 1% year over year, down to $11.8 billion. Add to this an increase in both the cost of goods and the other operating charges have made their total operating income drop by a massive 23% year over year, which has resulted in a diminution of 8% in their net income. But where we can see the downside of their earnings is notably in terms of their cash flow, where we can see that both their cash flow from operations and their free cash flow are down compared to the same period in 2023. This has been justified by the company because of a $6 billion payment that has been made to the IRS related to ongoing tax litigation. However, in my personal opinion, their latest earnings report that haven't been that good are more a short-term problem than a long-term one, especially knowing the excellent track record of growth that the company has been able to see by becoming the world's largest beverage company with a market cap exceeding $200 billion. And so the recent dip that Coke has been seeing in their total valuation appreciation over the last couple of weeks could represent a certain long-term potential opportunity for you, especially if you believe in this elite supply chain and distribution pipeline trading to a reasonable price to earnings ratio of about 26 at the moment. But one of the reasons that should justify the way that you want to invest or not in this company is definitely their excellent growing 3% dividend that has been growing over the last 62 years consecutively. So it might not be a company like Tesla that will make you rich over the next couple of years, but it is definitely a great company for you if you're looking for great passive income for your older days. So there you have it. Those were my 3 favorite companies to have on my watch list for the next month of December 2024. Obviously, there are still great other options on this crazy market, but I personally believe that these 3 companies still have a lot of great long-term potential capital appreciation. So if you are a new investor that is looking to start investing on the market, or if you are an advanced investor that is looking for one of the best brokers in Canada and in the US to invest, I have recently decided to transfer a certain part of my total money towards Moomoo to benefit from all the great perks that this company is offering you. So if you're looking to learn more about it, make sure to check the link in the description of this video. And if you're looking to find some of the best ETFs to invest in before the end of 2024, check out the video that's gonna be right over here, and I will see you soon. Peace!